Okay, good afternoon, ladies and gentlemen. This is Michael Camo from Minyanville. I'm here with my good friend Sean Udall. Sean is the author of Minyanville's TechStrat Report. He has over 20 years of experience researching and trading technology stocks, so he's our go-to guy for Apple, Microsoft, Blackberry, Samsung, whatever else you have. We are going to cover a lot of ground today. We're going to talk Apple, 1998 parallels, the bubble, Yellen, and we're going to try to leave a lot of time for Q&A because usually we have more questions than we can handle. So, Sean, how are you doing?
I'm great. How are you?
I am good. So, let's talk about bubbles. Obviously, Yellen brought it up. Are you seeing anything that looks like a bubble these days?
Well, I mean, so here's, I am. So, I mean, we could make a pretty good case, and I wrote a fair amount about this in the early spring. There were a lot of pretty crazy technology moves occurring. So, whether it's FireEye at 95 or Splunk over 100 or Workday close to 100, I mean, there was a lot of stuff getting pretty darn rich, and I was either writing a lot of calls or just selling stuff outright. And I don't know if you want to go through some of my comparisons I have here, but, Yellen had this moment, her version of her irrational exuberance moment, a la Alan Greenspan of many, many years ago. And it's sort of funny how she called out a couple possible bubbles or emerging bubbles, and what did she specifically mention? Social media stocks and small cap or something. But, she didn't mention bonds. I mean, bonds in general are in a bubble, in my view. She didn't mention EU sovereign bonds, which are eerily close to sort of bubble levels they were years ago. I've started writing about that. I kind of think there's a new Nifty 50 occurring with the dividend payers. A lot of my stocks might trade at PEs of, well, Apple trades at a huge discount to the S&P 500, but a lot of the stocks I favor are not that expensive relative to growth rates of 35 or 50 or even 100%. And yet, there's a lot of dividend payers that are paying 2.5 to 3.5% dividends that have maybe 4% revenue growth, and they're trading at PEs of 19, 20, 25, 27. And I never hear anybody mention that they're expensive or let alone in a bubble. So, I mean, my view is there's always a bubble or two or maybe 4 or 5. But what's funny is that the real ones that cause the most damage don't seem to really get the attention they deserve until they cause the damage. And where people are talking excessively about bubbles is usually an area which might become a bubble or there's an emerging bubble, but it's certainly not fully blown up yet. So, I mean, we've seen this story play out many, many times, but that's sort of my 2-minute take on it.
Okay, are there any areas right now that you see as particularly bubbly within tech?
Again, it's what I would basically look at. I mean, Yelp has been a name that I've pointed out several times, but Yelp has been highly, highly victimized with the high beta, sort of the popping of what I call the mini bubble. Most of the stocks that are the highest growth. Some people say they're the best new companies, but they're the highest growers. Have all, almost to a company have dropped anywhere from 50 to 75% off the highs. Now, a lot of them have just recently climbed, 30, 40, 50%, so they're not down that much anymore. But, a Yelp was a name I kind of picked on. Netflix is a name in the past I've kind of picked on. I certainly thought names like, we don't talk about these a lot, but Alti and Concur and a few of these cloud companies. So in fact, what's funny about what Yellen said, it's almost like she wrote what she wrote. Like if she wrote what she wrote on that comment 4 months ago, that would have been perfect, and I would have 100% agreed with her. But I'm wondering if they wrote that comment in there to the Fed minutes and kind of just left it there for 3 or 4 months and didn't really go back and look and say, oh, wait a sec, actually, hey, this stock's down 72%, and this stock actually went down 58%, and that stock went, I mean, Twitter, what did Twitter go down? 55% from the high. So, I mean, we basically have had an area where a mini bubble popped. But, yeah, there's definitely stocks out there that are pretty darn expensive. So you got to be a little bit careful of what, you really have to believe in the growth. If you're going to pay 15 to 20 times sales or more, you better be right. You better believe in the growth. But in tech specifically, I think I've kind of pointed out where I think the more serious bubbles are. I think bigger bubbles exist in bonds. I think bigger bubbles exist in certain dividend pairs. The utility sector may be kind of bubblish. So I think what we had of a bubble got taken care of in a big way in the first quarter.
Okay, so why don't we move on to M&A? Do you think we're going to see more deals this year? I mean, Apple, Google, Yahoo have been very active in the last couple of years. Do you think it's really going to pick up?
I do, and in fact, I kind of thought it would start off, and M&A would be fairly good from, let's say, maybe once we got through the first quarter. And it was actually it was very mild, and not many deals were happening. And then all of a sudden, in fact, it kind of went after kind of this mini bubble sort of popped. It seemed like that spurred on a few deals. Now, what's interesting is that a ton of M&A is still occurring with public companies buying private companies. I mean, I've almost lost count of how many companies Facebook and Twitter have bought in the last year. Twitter just bought another company recently. Excuse me. They bought a fair number of companies, all smaller deals, but they bought some that are $200, $300 million range. Same thing with Apple. Apple finally spent a few $1 billion. I'm not sure I love the deal, but I think it's a pretty good deal. But they spent $3.2 billion on Beats, again, private company. So I do think I think M&A in general is going to pick up, and I think M&A in tech is especially going to pick up. I think the areas network and security convergence would still kind of be my number one area. And frankly, I'm almost shocked that we have not seen a deal in the security space yet. That's probably the biggest surprise to me. But you know, sometimes you find M&A in areas that are kind of continuing consolidation stories. So one of the other areas I'm kind of pointing out are semis, and semis have had a fair amount of consolidation, and I kind of think it's going to continue because what happens is companies look, and if the playbook is out there. So for example, like Micron had a great, just an unbelievable M&A deal when they bought Elpida. So now Micron has pricing power, and they've consolidated an industry that used to be a hated industry, is now becoming a loved industry. So it's not that hard for other subsectors of tech to kind of see, look what the disk drive makers have done, and look what Micron's done, and that's the playbook. So if we can consolidate a subsector further and gain pricing power and then hold back, make sure we don't get into a situation where we don't oversupply our own industry, we can do really, really well. So I think those themes are probably going to be, I think they're going to pick up, and I think they're going to stay with us for at least a year or so.
Okay, so let's go on to IPOs, and I was wondering if specifically you could talk about Palantir and Spotify, because for me it seems like those are the two names that keep coming up.
Yeah, so I mean the IPO theme has kind of been great. I mean it's great that a bunch of new companies have come along to challenge the old guard. So it is interesting if you kind of look at the total quality, how good the IPOs have been in the last 2 years. I mean it's weird, frankly. It's one of the few times in my career where I have a number of names that I actually favor that are all recent IPOs, let's say within the last year or two. So I would say Palantir for sure is, I would be shocked if that doesn't become a star. And now will they do the same thing to Palantir that they did to FireEye, which was grant it absolute perfection status, run it up way too far, and then when it comes, 6 weeks to 4 weeks in front of the IPO lockup, kill it? I mean, that's almost the playbook. That's the one thing you kind of got to be careful. You can kind of trade these things for a while. Then when you get too close to the IPO lockup, it seems like there's a playbook that goes into effect on them. But yeah, Palantir is a security name. I think I really do think it's either the best or the second best security company in the world. That FireEye would be the other one. I think Spotify is going to be a big deal. Spotify, though, is tough for me. I'm probably going to do some of that deal, but it's just really expensive. It's hard to get to Spotify's valuation if you comp them against any of the other companies that are in the same space. But we'll see what happens. Another company I think is going to be fantastic is Cloudera, which is they kind of use one of these new techniques in cloud-based data management, and they're probably one of the leading vendors there. So I kind of almost say they might become kind of a Red Hat for their space. But there's going to be some deals. They're going to be the best of the crop of IPOs that I think are coming are still out there. I mean, the best news is what's happened recently is that the market has cooled off, and people have realized, hey, we just can't keep flooding the market with IPOs, and because that really was a huge contributor to the big correction we had in high beta earlier this year. There was just way too much IPO supply coming on all at the same time. So that, again, the warning sign or the thing that I'm going to watch out for, a huge deal is going to be this Alibaba deal. So depending on how it does, that could be a big enough deal that it could kind of cause some heartache for some of the companies that are trading already. So, I need to look it out. I mean, there's so much sort of bullishness when they talk about Alibaba. I'm not so sure I'm there. I'm kind of muted on the name. We'll see what they price it at. But that's going to be a huge deal, and it's probably going to have a spillover effect into the into other high beta stocks again.
Okay, let's move on to earnings. What are you seeing for this earnings season?
Well, I think it's going to be quite a bit different than last quarter. So last quarter we had this huge high beta correction, and then we had a lot of stocks kind of try to bounce off the lows. And there was, you had unbelievably good reports that weren't rewarded. I mean, you had a data, for example, that produced, 80 to 90% growth, completely crushed their expectations. Then they guide up really well, and the stock gaps up a little bit the next day, and they kind of take it down and they retest the new lows. So it was almost like there was no report good enough out of the new companies. And so what I kind of think will happen this quarter, if you have a high grower and it produces a good report, I think they will get rewarded because they've probably marked enough time and enough people have sold the stocks off. So, that leads right into like a Twitter. I jokingly say, will Twitter ever get rewarded for a great quarter? People can say, the media can never say what they want because they're trying to judge the quarter by the stock reaction. But Twitter hasn't produced anything other than a great report so far. Each report has been unbelievably good. So it's just a matter of time, I think, before they finally get rewarded for one. Another interesting name, now this is a name that's been beaten up, would be something like a LinkedIn. This stock has actually traded poorly for almost a year, maybe even a year, if not longer. They're another one. They didn't exactly have a terrible report. It wasn't great. But I think if they deliver, they could go up a lot. So I think what I call the beaten growers have a good shot at redemption. And what's interesting, we just saw Google, which, Google is now basically missed in some form for the last 5 quarters. So I wrote a report and basically said Google is going to go up after the report, and they did. Although I didn't think they were going to miss on the earnings line. They actually did have reacceleration on the revenue side. But that could be a good tell because Google didn't exactly produce a great report, and they bid them up pretty good the next day, and so far they've held on to a decent part of that gain. Apple's a big one coming up. Again, I think Apple could be like Google, and we can talk more specifically about Apple later. But the other report that I think is super interesting is Intel. How many times have we even talked about that the PC is close to being written off? And then Intel comes out with just a great quarter. But there's a very, very specific thing that's happening. And you have Microsoft made a decision, which was not to support Windows XP anymore. And, this is well talked about, but sometimes the obvious thing is the main thing. And it just shows how many people have stuck with old computers that still have Windows XP. And the fact that a Windows XP machine is now becoming more vulnerable every day, people are basically forced to upgrade. So I really kind of wonder how sustainable this Intel move is. I do have a really strong bull case on Intel, but it doesn't depend on PC. It's more that Intel now needs to become a leading fabrication company, chip fabrication company. And they kind of are internally, but they haven't outsourced much of that. And I think they need to do that to kind of take the next leg forward. But so it's interesting. I think we probably have really strong sort of what I call the Wintel food chain. Microsoft Intel. This Windows XP expiration is probably going to be pretty good for them for another quarter or two. Beyond that, though, I'm not sure how much there is there or how sustainable that kind of move is. But that could be pretty interesting. So, but anyway, I kind of my general playbook is that this quarter could act a little bit differently than last quarter, and that I do think if companies report really strongly and in fact do a blowout, a big beat and guide higher, I'd be surprised if those stocks don't get rewarded this quarter, where the last 2 quarters they really haven't been.
Okay, so all right, that brings us to the big topic I want to know about, Apple. So is a giant iPhone 6 priced in already?
I think, let's say part of it has. Part of my thesis is that you had to be an Apple, you had to buy Apple, you had to believe in it well before the release of the iPhone 6. That certainly has played out. I mean, the stock is up, what, 40 to 50% in the last year. It's probably up even a little more than that off of the sort of the ugly lows last year. But I mean, the thesis points are basically, I said Apple was going to retake a huge amount of share, and they did in the phone side. But that's just beginning. So the iPhone 5S was this incredible leap in technology, but it still had a tiny screen. And so Apple reasserted themselves on the innovation front, but all they need to do is make big screen devices. And what's funny is here's another really super obvious thing that I just don't think people are really, I mean, sometimes things are kind of mysterious and you got to dig super deep under multiple levels to really ferret out some really key good information. And I do a lot of that. But sometimes people just overlook something that's incredibly obvious. And I just don't know how well Android sales are going to do. They're already starting to be poor, in fact. But I just don't know really who's going to go out there and pay a similar amount for an iPhone in the Android food chain. I mean, sure, they're going to, if they do a 2-for-1 deal and you can get 2 Android, Galaxy, Samsung, blah blah 5Ss for $200 or something, they're still going to sell those. But if you're going to go out and pay $550, $650, $700 for a phone, meaning you're paying $200 with the contract, I just don't know how many of these phones are going to sell once you can buy either a 4.7-inch or a 5.2 or a 5.5 screen-sized iPhone. I mean, this thing could just be an absolute market share crush. And I think that people are coming around to that idea, but I don't think they're really going to believe it until they see it. So the other thing, don't forget, Apple produces more cash flow than basically any other company in the world. Berkshire Hathaway in some quarters might tie them, but 1 or 2 quarters ago, Apple basically produced the same amount of free cash flow, which would have been about half the total cash Google has on their balance sheet. So Apple did that in 1 quarter. A strong iPhone 6, especially if they have 2 large screen phones coming, they could have a $30 billion cash flow quarter, maybe even a $40 billion cash flow quarter. I think I wrote up a note where I said, correct me if I'm wrong, but I said they could have 2 quarters where they've produced 50 to 60 billion in cash. So they basically could produce the total amount of cash Google has on their balance sheet right now in 2 quarters. And so there's some good news priced into Apple. There has to be because it's gone up a fair amount. But I don't think the game is over yet. I don't think it's all priced in. And remember, in 2012, when everybody was in love with Apple, right, saying, oh, was it going to be $1,000 stock, $1,100 stock, I was not there. I like Google. I vastly preferred Google to Apple back then. So I have a history of getting off the Apple train when the getting is good. And I think it's way too early to talk about a peak in Apple stock price.
Okay, and since the iPhone 6 is such a big topic, is there an ideal configuration, at least in terms of screen size? Like, what would you look, best case scenario, like how big are these phones?
Well, I think 4.7 is the ideal size. We all have opinions, but there's lots of things that go into that. I've talked a lot about the Motorola Razr. Okay, to me that was and still is the best Android ever made. Interestingly, it didn't sell super well, but I think a lot of it is that it's only available on Verizon. So they didn't really make that device available to the whole globe. They had variations of it, but it wasn't exactly the same thing. It wasn't as good of a product from what I've seen. But that's a 4.7-inch phone. It feels like a huge phone, but it still fits in your jeans pocket. You can still get it in and out of purses and packs and things like that pretty well. But I love the jeans pocket test. To me, a phone is way too big if you can't get it in your pocket. And so there's still a huge appeal, though, for even larger screen sizes because a lot of people don't care. They carry them in other things. They put them in packs. Whatever. They put them in purses. Women tend to like bigger phones, interestingly. But, they're not trying to stuff that size of phone into skinny jeans, right? So the whole point is, I think, here's the best thing Apple could do is they could make multiple screen sizes, and it looks pretty clear that they're going to do that. But I would be pretty surprised if the 4.7-inch doesn't sell way better than everything else. I think here's a better way to answer the question. Once you get big enough, and Apple knows this, you get a big enough screen size phone, they're not going to sell any iPad minis anymore, and I think that'd be okay with them, right? So it could be a killer too for one device. If they make it big enough, but it's not too big, then it's a phablet. It's big enough that you can. It's a small tablet, but it's still small enough. It's still workable as a phone. So obviously that market out there. I mean, Android has been very successful in that phablet size market, and I think Apple's going to have a device to address that. So, but I mean, it's a big deal, and I think it's the market share. I mean, the amount of market share Apple's retaken is going to pale in comparison to how much they pick up. But the beauty is they're not going to go after the low end. It's going to be pure high end. So there's still going to be a big market out there for really cheap phones, but Apple really doesn't care about that. But yeah, I mean I think 4.7 inch is sort of the best screen size. They'll probably sell the bit. It'll basically replace whatever the current. I don't even know is it a 4-inch or 4.2 or something like that. But the old 4-inch phone's probably going to go away.
Okay. So are you ready for some Q&A, Sean?
Sure.
Okay. Ladies and gentlemen, if you have a question, please put it in and we will get to it. We've left about 20 minutes, so we should be able to get to everything this time. Okay. So Sean, first question is from me, and it's about Twitter. A big discussion that's going on is whether Twitter or not can go mainstream, because it seems like it's hit the wall in terms of user growth, like very early relative to Facebook. Now, do you think Twitter can go mainstream, and does it need to?
Well, that's two questions. Things could kind of divulge a few different ways. I don't know if we can't say. I mean, it's pretty darn mainstream. I mean, so if you want to make the comparison, is mainstream mean you have to have as many users as Facebook? And if you want to define mainstream by that, I don't know if they'll ever have as many users as Facebook. But I mean, here's the thing. I think 750 billion people have signed up for Twitter. 750 billion people don't use Twitter every day, but so there's a big discrepancy between monthly active users and total people who've signed up and occasionally use the platform. So I don't know. I mean, you get to 250, 300 million monthly active. That's pretty mainstream. I think a more important thing though, it's sort of like in a way it's kind of like thinking about Apple or almost like a Porsche or BMW in that you don't have to have a product that can sell to every human being on Earth, or every human being on Earth doesn't have to use it. What matters is what is the value proposition of your product, and do the people that use it, are they worth sort of, can you monetize based on that user base that you have? So Apple's a really good example of a company. I mean, there's lots of companies that have sold more phones, and Android has a way bigger market share more. But I mean, this stat as well as I do. I mean, Apple still commands just a massive amount of total profit in the smartphone segment, right? It's like 80%, 90%, different quarters it varies, but it's just a huge, huge percent of the total profits of the industry. So I think Twitter could sort of over time gravitate to that. Here's the other thing: there's a lot of people who actually get information from Twitter now because it's sort of a leading news source that may not necessarily have to really have a Twitter account. I mean, Twitter gets mentioned on TV, and it gets mentioned on sports, and Rory McIlroy wins the British Open, and the Golf Channel is talking about what Rory McIlroy tweeted, right? So I do think there's a fair amount of upside to increase monthly active users, but to answer one of your prior questions, they don't necessarily have to grow monthly active users as much. I do think they will grow them, though, and I almost think there's a double benefit in the future. I think they'll grow the monthly actives probably a little more than people think. And I do think that Twitter's platform has the ability to basically monetize better than almost any other social media platform. So, I mean, that's the best way I can answer it. Again, I think the best way to really judge Twitter is kind of judge them on what they've reported thus far. And at some point, 108% quarter followed by 119% growth quarter followed by whatever they do this quarter, I mean, at some point, they're either going to grow into valuation and then start growing off of a stupid cheap price, or people go, well, maybe it's okay to pay 13 or 14 or 15 times forward sales for Twitter because they're growing at 3 or 4 times the rate of other companies that have the same valuation. So I think that's eventually what's going to happen.
Okay, so we are getting a ton of questions on FireEye. So what do you think about FireEye here?
I haven't changed my opinion. I mean, I think the best thing to say with FireEye is that the move from 35 to 55, maybe even as high as 75, was pretty rational. The move, anything above 75, and especially to 95, and I might have hit 98, sort of anything above 75 was probably completely irrational. So then, of course, the stock had to go and do a 180-degree reversal. So same thing. I think it was probably justified to take FireEye back down somewhere between $45 and $65 in the selling, but it went all the way down to 26 or 27. So you could probably say it basically overshot by 20 to 25 points to the upside, and then when it corrected, it probably basically did the same. It overshot by that amount. But you know, I earlier mentioned that the security space is the single biggest surprise that we haven't seen a deal. At some point, either FireEye goes up on its own, or I think somebody buys them. I mean, if they stay kind of down here between $30 and $35 for very long, and they keep producing decent results, it's almost a must-buy by like a Microsoft or another big company, because it would just be an absolute no-brainer. So my opinion hasn't changed. I still value them long term. So this would be like 2-3 years out. I still think they're about $100, $150 stock. 150 is probably my. And it could go higher. I mean, it could go higher. The earnings growth or the revenue growth is still stellar. So they put a couple more years together. There again, their price to sales ratio 1 year forward got pretty damn high at 21 times, 22 times. Down at 11, 12, 13, it's not that bad. Not bad at all for a 50% grower. So my view hasn't changed, but if you were buying it at 92, that wasn't what I was saying to do. So it's like anything in tech. It's always better to buy when there's blood in the streets, and FireEye is no exception. But I do think they could be one of the big winners. Absolutely, my long-term view hasn't changed.
Okay, we're also getting a lot of questions about other cloud names like Splunk, Tableau Software, and Workday specifically. I mean, do you have any thoughts on those names?
Yeah, so let's maybe almost go in reverse. I think Workday is just it's still almost egregiously expensive on sort of standard valuation metrics. But the one thing Workday has, and a lot of people just don't understand this yet, and they will over time, is that this is a company that's sort of valued on billings and future billings. So when Workday signs a contract, it's not just a 1 year contract, it's a 3 to a 5 year contract. But they only really, on the financials, they only get benefit for 1 year. So as expensive as the stock is, they do have very sticky and really high growing long-term contracts. So that will serve to compress the valuation over time. But in short, of all the stocks that kind of went to a crazy high, I would almost say that they might be the first name to get back to the old highs. So their old highs were about 116. I would not be surprised at all if Workday is the first of all these high betas that got whacked to get back to the old high. As far as Splunk and Tableau, so Splunk and data, they kind of run in the same ilk, if you will. Splunk is more of a sort of a data analytics company. You can do a lot of really hardcore analysis with it. You can with data too, but data is more of a visualization company. The products actually tend to work together pretty well. So there again, I mean, all this stuff tends to move together. It's all highly correlated. By the way, FireEye trades sort of in tandem with Workday and Splunk and data too. But same thing. I think these are good winners. I think they're strong companies, very high growth, and they're way better buys now than they were 3-4 months ago. Every one of these names overshot to the upside, and then you could make an argument that they overshot to the downside. So they all have to deliver. If any one of them misses earnings, they're going to get completely demolished again. But these are also companies that could miss a quarter now and then and still end up being an unbelievably great company in the future. So Splunk is the one thing I will mention about Splunk. There's probably been the most rumors about various competitive threats coming, and I do a lot of work. I mean, I talk to a lot of people that use these kind of products. I do a lot of what I call buying interest. How much buying interest from the enterprise is occurring with these kind of names. I mean, I can't verify really that there's much competition for Splunk out there. There's guys out there that are trying to sell a much inferior product for way cheaper, but that's not necessarily competing kind of at the same level. So I don't see a ton of competition. Another one, what a funny thing could be happening, and this is worth mentioning to all these companies. If just one of these companies, again, FireEye, Splunk, Data, Imperva, there's probably 10 other names, Aviv Systems, if one of these guys just gets bought out, the rest of the group is going to go. So if any deals, if any M&A occurs in the sector, you pretty much only have a chance to go grab one or two of these companies. So let's say if you're Microsoft or you're IBM or you're SAP or you're any of these guys that are shopping, you pretty much only have one chance, because once one of these companies gets bought, it's going to be really, really hard to buy the next 2 or 3, because all of a sudden the others are going to jump hugely, and then the premium that you planned on paying is too low a price. So it'll be very interesting to see what, if any, of these companies gets bought, what one gets bought first, and then what happens to the rest. But to me, there's really, it'll be a really dynamic, powerful company that buys one of these companies out, because once one of these go, and if you're like, let's say, just say you're Microsoft and you buy FireEye, or let's say you're IBM and you buy Splunk. If you're that company that does that deal, you instantly have a huge competitive advantage over pretty much everybody else in the space. So we'll see what happens. I'm a little surprised we haven't seen a deal in security yet.
Okay. What does the Apple and IBM deal mean for Blackberry?
We'll have to see over time. The short answer is it can't be good. As far as specifics, I mean, Blackberry still has a big installed base. I really am not involved in the stock anymore. I have a little bit, a little tiny bit. I basically sold that off as I've made gains on other things. That was a nice hit about a year ago, and that's kind of been a dying franchise. But I do think you could basically just sum it up and say the turnaround plans of BlackBerry and the chance they had, it gets decreasingly likely to succeed with the Apple IBM deal. By the way, I have a question. Somebody sent me a note. So let me just interject one. Somebody wanted me to comment on SanDisk results and the stock reaction. So I had gotten off SanDisk a little while ago. I've probably missed the last, I don't know, 15 to 20% upside in the stock. But that's kind of what I do. When stocks get to a point where I kind of think they become fully priced or more than that, I don't really like to own them anymore. And so I actually don't think SanDisk had a terrible report. I think it was a good report. I wouldn't call it a great report. But they just got to a point, they got to a price where the stock had just gravitated up too much. You know, they'd moved a ton with Micron's big run. And they don't exactly have the same competitive advantages of Micron. They haven't consolidated that part of the industry quite as much, although they have. I would say they have good pricing power, but they don't have as much pricing power as Micron does. So you can't, I think a lot of people applied the exact same thesis to SanDisk as Micron. And I don't quite think that works. So, I mean, I would probably need, I think the person probably be more interested in saying where I would like to get involved in SanDisk again. I'd probably want to see about another 10 or 15% downside, and then I would find the name pretty darn attractive again. But it's still a very good company. By the way, it's another stock that's just not that expensive. If you back out the net cash on SanDisk, which is about 25% of their market value, you have a stock that's trading at a discount to the S&P 500, even at $93, $94. So it's not that expensive. But these names need growth to work, to keep working, especially after, and they've basically doubled in the last year. But yeah, at 85 or lower is probably where I'd start getting more interested in SanDisk again. And if I bought SanDisk at as high as 85, I'd probably have a call right. So I'd buy the stock and I'd sell calls against it.
Okay. So let's talk about Yahoo.
Sure.
And I guess Alibaba plays into that equation as well. So, I mean, what do you think of Yahoo here? Do you think it's worth holding on to for Alibaba money, or I don't know. I guess that's pretty much it. What do you think of Yahoo and or Alibaba?
I'll expand. So I actually did a nice little Yahoo trade recently. It's actually getting close. So I bought some, I want to say right about here. And I think I caught about a 3.5 to a 5-point move. It sounds kind of unsexy, but you know what? 5 to 7% in 3 weeks is a good trade. So down here, kind of in between 32 and 33, at 30 or below, I'd definitely even be more interested, and I could get a bigger position in it. So, but I do. I think you basically own Yahoo for Alibaba. Alibaba is probably going to trade above what people are talking about the valuation level right now. The problem, here's the big, I mean, Marissa Mayer is a great leader. She did some really good things at Google. I mean, there was a ton of positivity that she brought into Yahoo. But what's interesting is how poor her merger selection. I mean, she's been very active in M&A, right? And she had a lot of money to play with. But I think you and I agree. I mean, it seems like she really overpaid for Tumblr. She bought some app. There was a guy, a 17-year-old guy that created an app. I can't remember the name of it now. but it was like a huge amount of money for an app that all it did is condense news stories. So I would say that she's been way too aggressive and overpaid way too much, using up a fair amount of cash. So it's kind of the Alibaba thing could make him worth 38 to 40 bucks again. The scary part is that she's had quite a bit of time, and she has spent quite a bit of money, I think between $2 and $3 billion, and she really hasn't gotten any growth out of it, and that's kind of disturbing to see. So I'm mixed on it. To me, it's a trading vehicle. I'd much rather own any of the names we've already talked about. I'd much rather own any of these names than Yahoo, right, for an investment. But from a trading vehicle, I think it probably has 5 to 7 points of upside in it. Again, I'd kind of like some more bad news to happen, maybe push it down to between 29 and 31, and I think that'd be even a better buy. But I think Alibaba will probably be valued a little more than people think right now. And then it's a matter of, can Yahoo get the core of Yahoo growing again? I don't know. We'll see. It's only probably about a 50-50 proposition right now, unless they can do an M&A deal that really adds growth to the bottom line. We'll see.
So what do you think about Netflix? They just reported it looks in line, looks like they had strong user metrics. Do you think Netflix is still good up here at about 457?
Not really, because I'm sort of above. Probably my number on Netflix has sort of been 385 to 400 and higher. I've kind of, to me, it's more of a short. So in January, that was one of the names that was short coming into the year. I probably didn't make much money on it. In fact, I may have lost a little, but I think I did make a little money on my last short on Netflix. So to me, it's a tough stock to. I think you can trade it. I think you can ride momentum when there's upside momentum. You can also ride momentum when there's downside momentum. So you can be long, you can be short. It's hard for me to grapple and get my head around an investment thesis on it at these prices. So at the same time, here's what I'll say about them. And I've always said, if Apple and Google and Amazon can't disrupt you and can't basically end your life as a company, then you're doing a lot of things right. So what's funny is everybody's written the demise on Netflix because of potential competition, and that hasn't even come close to happening. So, nobody else has really touched their core audience, their core business. Netflix is still growing. It's just, even though I'm a tech guy and I love growth, I always want to pay as little as possible for the growth that I'm buying. And so in my process, it's just hard for me to really it's hard for me to put Netflix above a lot of other names I like. Therefore, it really never makes its way into my portfolio.
Okay.
Other than a short.
Okay. So what do you think about Cree? And do you think it has any potential as an acquisition target?
Yeah, I do. So Cree is another one of these that's kind of a cult stock. It's got this specialized business. It's got a specialized product. So here's in the very, very long term, the thing that Cree has to worry about is, can Chinese and other parts of the world, can they basically emulate their intellectual property and make their products similarly enough and way cheaper? That has sort of been the bugaboo of Cree. But I do think, I think GE has been mentioned numerous times as a potential acquirer of Cree. There's maybe some other companies as well. So I think it's a decent speculation. And you know what? Hey, it's pulled back. It was 76, now it's 50. It's a stock that I liked a lot better. Funny short story. Cree was one of the companies that I built a huge recovery. We all got, well, unless you were super genius and you were super short in 2008. I was not short enough. But I bought Cree, I want to say, at $19 in December of 2008, and it was amazing how fast I made 60, 70, 80% on the name when the market turned in 2009. So I do have some fondness for trading Cree, and I have a good personal history of doing so. I haven't really done much on the stock for probably a year, but I do think it can work. And Cree's one. Here's the best way I think to play Cree is if you get a fairly hot market again and people start chasing beta. Cree almost always works to the upside. That's when the market will forgive them a bad quarter now and then. But I probably wouldn't do much on Cree unless the market looks like it's getting pretty bullish and kind of frothy. And then you can almost always Cree is about a 95% shot in a frothy market.
Okay. Do you think Pandora is a short?
I do, because I was short Pandora before. I covered my short. In fact, that probably has been my best short of the year. I shorted the stock. I think I covered it all, I want to say $2 to $3, maybe even a little more than that below where it's trading right now, so in the low 20s. I'm not short Pandora here, and there's probably one reason, or there may be a couple. The M&A kind of keeps me out of the short unless it gets back above, let's say, 33, 35. I mean, I think about the most the company's worth is like low to mid 30s. So even if they get M&A, I mean, $33 would be a good price to pay. I think Pandora even would probably be happy to sell for 33 or 34 or 35 bucks. So if it gets up there again, I'll short it again. It's a good tactical short. I like to have shorts against my longs. But down here, it's just not quite high enough yet. And I mean, if Spotify comes out and trades, I mean, you correct me if I'm wrong, but I've heard numbers like between 10 and 15 billion. So if, let's say Spotify actually starts trading and they're a 12 or 13 or 15 billion dollar company, well, guess what? Pandora's not going to stay at 5.1 or 5.5. They're going to go up a lot. So I don't really want to be short Pandora in front of a Spotify freight train if it comes. But it's not a name I'll be afraid to short again. I'll probably be short the name at some point. Again, we get if my 1998 thesis keeps fomenting and keeps increasing, Pandora will probably have a big move. It'll probably go up 20, 30, 40% again, and it'll set up to be a good short in the future.
Okay, what do you think of Netscout, which is ticker NTCT, for those who don't know?
I know that name a little bit. I used to know it better. I don't know that well enough to really comment on it.
Okay, do you think iPad demand is going to increase anytime soon?
What kind of demand?
iPad, for the Apple iPad.
Oh, that's a really interesting question, because I would say that the demand for given how dominant that product has been and how much competition has been thrown at it, I actually think demand is still pretty darn good. I think the problem is that it's a product that is expensive enough that it's gonna have a limited market, and so many people have already bought. Well, I mean, I have like basically 2.5 iPads, so I think a lot of people that own one don't own one, they own two. So, but I think that as it's going to be a very good product. It's going to evolve like the phone. So once people's iPads get 2 and 3 years old, and the new one comes out, whatever that new one looks like, and how much better it is, and how much faster it is, so it's going to kind of, in a way, create its own PC refresh cycle. But it's just going to be its own iPad refresh cycle, right? So. I don't know if demand's really an issue. It's almost like it's a victim of its own success. But I will say this: I mean, lots of other products have tried to kind of beat up on it, and nobody's really done much against it. And then if you want, again, let's go back to a 5.5-inch phone. You can almost make an argument that that's a bridge product that's both a phone and a tablet. And I do think they will sell just a sickeningly huge number of 5.5-inch phones. So in a way, so let's just say, in effect, a lot of iPad demand could be soaked up by a 5.5-inch phone. So I almost don't. I think, not to say the person's thinking about it the wrong way, but I kind of look at the iPad differently, and it could evolve. The iPad could basically. I've actually been wrong about this. About 2 years ago, I really thought Apple would lead and would actually be the first computing company to come out with really, really good touchscreen computers, not just handheld devices, but computers. And interestingly enough, Windows did that. Now, the Windows 8 platform is not very good, and people don't like it. People, in fact, want a button to basically turn Windows 8 off and go back to Windows 7. But at some point, I do think Apple will sort of merge the capability of iPad with the capability of their laptops, and it'll be a massive home run. So I think it's just a matter of time before they sort of evolve that technology to the next iteration.
Okay, and that brings us to the final question. Ladies and gentlemen, just as a reminder, we will send you a link to a replay, and we will send you the presentation slides, so don't worry about emailing us. So last question is, what do you think about AMD, particularly with the Seattle project with ARM 64-bit server technology?
Yeah, I mean, AMD... Specific. Yeah, I mean, there was some hope there, but okay, this is just one. It's kind of like Blackberry, unfortunately. Now Intel's really finding its groove. There's this Microsoft refresh cycle. I just don't know. I mean, I think AMD stays around. I don't think they go out of business, but it'd be very hard for me to get to get bullish and to put money behind AMD. I actually thought they were going to have a better quarter than they did. So my estimates and my guess for what they were going to do, because I thought they would get some benefit from this Windows XP refresh cycle. In fact, I thought they might get quite a bit of benefit, and it doesn't seem like they really got any. So I don't know. This is one I wouldn't short it. I mean, I don't dislike it enough or think there's enough downside to short it, but it'd be tough for me to put money into the name.
Okay, that will bring us to the end. And Sean, thank you once again. Thank you very much for your time.
Thank you, everybody. Have a great night.